Good morning. Welcome to our empowerment session topic, alternatives to life insurance. Focus on annuities with Cassin Wolfe from Modern Woodmen. In this virtual presentation, Cassin, financial representative for Modern Woodmen of America, will explore alternatives to life insurance, focusing on annuities as a financial planning tool for parents, guardians, and caregivers of special needs and dependents. We'll provide a broad overview of annuities, explaining their benefits, and present an illustrative example if needed. Additionally, we'll discuss tax benefits of annuities compared to stock market investments and regular bank accounts, especially in the event of a child passing. This session aims to clarify how annuities can provide financial stability and peace of mind for your special needs dependents. So good morning, or I should say good afternoon. So just to kind of get things started, can you tell me what personal or permanent life insurance is?
Sure. Well, thanks first off, Janice, for inviting me here. I hope this will be beneficial, I think, for everyone in the future. Just to kind of start it off with permanent life insurance. Permanent life insurance is insurance that does not go away. So a lot of people think that they have life insurance through work, that will cover them for their entire lives. The sad truth is that life insurance actually is owned by the company that you work for. So what that means is if you switch jobs or even if you retire, that life insurance will actually fall off. And most people that I know are not looking to get more life insurance in retirement. They're looking to keep what they already have. So what permanent life insurance does, it allows you to actually own your policy. So you're actually the one in charge of it. So if you want to get rid of it, you can get rid of that policy. It has nothing to do with anybody else but yourself. The other good things about permanent life insurance is that it provides a tax-free inheritance to your family. So the best part about that, again, is tax-free. And in a world of taxes that never seem to want to go down, that's a huge benefit, especially since you know that you'll have that, later in life if you do plan on retiring or switching jobs or anything like that. So just a kind of an overview there on the permanent life insurance.
Okay, that makes sense. So one of the things I hear from a lot of people is why do children need life insurance?
Yeah, so this is definitely a topic of conversation, it seems, with a lot of parents. A lot of parents are wondering, I need life insurance on myself, so why would I get it on my kids? The number one reason why you want to get life insurance on your kids is to lock in what we call their insurability. What that means is that not everyone in the world is able to get life insurance. So when the kids are young, we actually have a lot of parents that will get life insurance on their kids the second they are born. Reason being is because one, they're healthy right away when they are born most of the time. Second, also being is that it'll never be cheaper than that very second when they're born. So locking in that insurability, because you really never know what health issues are going to arise later in life. Once you lock them into a permanent life insurance policy, the life insurance company cannot take that away from you. It's a legally binding contract. So if your kid does end up getting health, issues later on in life when they're 12, 15, 8, anything like that, that's something that can't be taken away from you, which is the biggest benefit to locking your kids in and while they're young and healthy.
So one of the things that a lot of people often attribute health to and it is a physical health. Mental health, though, it's playing a pretty big role today because you've got a lot of children that are on medication for various reasons, whether it be something like a behavioral or depression or suicide or things of that nature. So is it common now for insurance companies to look at children's health records and see that they have a history of mental health and possibly either not insuring them or making their rates a lot higher?
Yeah, so another great question too. To be honest, insurance companies look at mental health even more maybe than they look at physical health a lot of the time. Because insurance companies, how they work, they're going to approve people based on their risk. So for example, if you have, you know, a 14 or 15-year-old that has been on medication for depression and anxiety for, you know, a large part of their life and everything, the insurance company is going to look at that individual as a risk, whether you think about it like that or not. So they will oftentimes look at medical records. With all life insurance applications, you have to answer medical questions. And all those medical questions, they entail everything from your daily medication to when the last time you saw your doctor, to if you've seen a therapist over the past couple of years, all that stuff. So again, that really goes back to locking your kids in when they're young, you know, right when they're born, before they even have, you know, the option to have those health issues arise later in life. Goes back to that. So.
Yeah, in the beginning, I forgot to mention that the main reason for asking you to talk to families about this is because in our personal situation, our daughter was born uninsurable, and we didn't learn until after she passed away that we could have started an annuity. And that leads me to my next question is, what do you do in the event that you find out a child or even yourself is not insurable, but you need to find a way to do something to save money or cover costs or, you know, whatever it might be? What are our other options?
Yeah, so the number one, you already stated it right there, is going to be an annuity. And what an annuity really is, to make it really plain and simple, it's a tax deferred account. So what that means is that the money in the account grows tax deferred. And that's a huge, huge benefit to parents, because if you set up an investment account or anything like that, a lot of the time when those investment accounts grow, you're going to be continually paying taxes on those over the course of the years, as your money goes from $1,000 to $5,000. And again, going back to taxes that never seem to want to go down, that's not going to change here in the future either. So what annuities do is those accounts grow tax deferred. And you can kind of choose, really, there's two different types of annuities. There's called fixed annuities and variable annuities. Fixed annuities are going to grow very similar to a bank account. For example, an interest rate right now for a fixed annuity is 3.75%. So it's a very safe place to park that money in there, where you know exactly what you're going to get out of it, and you don't have to worry about the market crashing or anything like that. The variable annuity is the exact opposite. So that will actually go into the stock market, and will go with stock market gains and so forth. But again, both of them grow tax deferred. So as long as that money is sitting in the account, the owners of the account do not have to pay taxes on the gain or anything like that. So a huge plus there, compared to, you know, maybe just starting a savings account or something like that at the bank.
Is there a minimum to start an annuity at?
Yeah, so I mean, it definitely changes for companies. I know at Modern Woodmen, our minimum is $25 a month. And in today's world of inflation and everything, it seems that you can't go get two burgers at lunch for $25 a month. So it's definitely the cheapest option. Even life insurance can get more expensive than that, depending on if your kid has health issues or not. So definitely something that you kind of want to weigh the pros and cons with.
Absolutely. Thank you. So, how can life insurance or annuities help my special needs dependent?
Yeah, so you can actually open up an account for your special needs dependent, and you can be the payer of it. So what that means is, you know, God forbid if something does happen to your special needs dependent, you can be funding this over the course of time to help pay for funeral expenses, grieving, because most people want to take some time off work, and any other expenses that come out of that. And you know exactly what's going to happen with that. The difference on kind of those accounts, and how they're kind of taxed. So if you're actually the owner of the account, so let's say mom is paying for special needs dependent, when you go to withdraw that money for funeral expenses, if you want to live off of it for grieving, things like that, the only thing you do is have to pay tax on the gain. And again, if you're in a fixed annuity and it's at 3.75%, there's not much gain really in that account. But again, what I tell people, it's kind of like hiding money from themselves. When a lot of people start a savings account or something like that at their personal bank, they can pull it up in their phone and they can see that balance, and it often tends to get spent on stuff that it's not supposed to. So, That's what a lot of people use it for, is kind of that alternative to life insurance because of the tax benefits to it. And you know exactly what you're going to get there at the end of the day. So
That makes sense. Thank you for clarifying that. You went over the tax advantages or disadvantages with life insurance versus annuities. But how does life insurance or annuities affect SSI or SSDI?
sure. So a lot of that stuff is really going to be treated the same way, because if you, let's say you have a life insurance policy on yourself and you name your special needs dependent as the beneficiary of that, that can actually end up shutting off their SSI because it would go into, a pool of assets that would be over the legal limit. It can actually turn off their SSI payments on a monthly basis. Same thing with annuities. Same thing with any sort of investments. It can all, affect your SSI if you don't have it done correctly. The way to go about that separately would be to set up a special needs trust, which is a little bit different topic of conversation. But that is the way where you can kind of funnel the money to your special needs dependent and not shut off their SSI, because I know the SSI is such a huge benefit to families and especially to that special needs dependent. So definitely something you want to think about when you're doing your estate planning, because you won't be there any longer, and you want to make sure that your special needs dependent is taken care of in the right way there. So
That makes sense. So not everybody has life insurance, or let's just say I have it through work and I say to myself, okay, yeah, you're right. Good point. If I quit, they let me go, or I retire and I can't take it with me. That's money that's spent that I'll never get back.
yeah.
So let's just say now in my current stage of life, what if I decided, oh my gosh, maybe I should get life insurance? What do I do to go about getting life insurance?
Yeah, so the life insurance process is the same for everybody. You're going to go through medical questions, depending on how much of a death benefit you're going to do. For most companies, it's over 250 grand. You will do a physical, so they will, go through that, take your blood pressure, blood, urine, all that good stuff. Really, where life insurance comes into play and the ratings and everything, it's based on how old you are and your gender. I will say females are always more inexpensive, just because I like to say that most males are big dumb animals and we never like to go to the doctor. So that comes and bites us later in life. But that's kind of where, so it's always better to get it while you're younger. You're oftentimes healthier when you're younger. So it's always better to think of it earlier in life, and you'll be thanking yourself in retirement with that. How that goes, you put the application in, you go through, answer your medical questions. The underwriters will come back and give you a rating. That can go two separate ways as far as how that rating can go. If they come back and look at you as a very healthy individual, you can actually get what's called a preferred or super preferred rating. What that means is they'll actually give you a discount on your premium. So that again will just save you money over the course of time. Again, it can also go the opposite way. So if they look at you as an unhealthy individual or as a risk to the insurance company, they can actually charge you more of a premium. So that's called table rating. But again, a lot of that's just up to how your physical comes back, how your medical records look, and things of that nature. So.
Okay. And so what if I don't qualify, or my dependent doesn't qualify for life insurance, or it's simply just cost prohibitive because it comes back too expensive? How would I start an annuity?
Yeah, so an annuity is completely different, where they don't do any medical underwriting on it. So it doesn't matter if you're Michael Phelps and you're a seven-time Olympic gold medalist, or you're a pretty unhealthy person. Annuity is just, you are approved for funding it. All you have to do is show that you have the income to fund an annuity, and you can start funding an annuity the next day. Again, really the stipulations on it, the minimums on it are $25 a month at Modern Woodmen. I'm sure that changes company to company, but a lot more relaxed underwriting process, because they're not going to go through and ask you what medications you're taking or anything like that. So that's another big plus why that's the best alternative to life insurance there. So.
Well, thanks so much for offering all that great information regarding life insurance and annuities. Appreciate your time. And for anybody that watches this video, if they have more questions, please feel free to reach out to Cassin directly. And thank you all very much, and have a great day. Thanks.